Good afternoon, everyone. My name is Dave Prococo, and I'm the Director of Transfers, Refunds, and Enrollments at the MTRS. And I will be presenting today's webcast on the special election for Retirement Plus. Very special election going on right now. And you are in a select group of people that will get to make this election. We'll be covering a lot of information today. So I'll try to cover everything in detail. And I realize it's the afternoon, you've had a long day at school, so I'll try to cover it quick. And this information will be posted on the website. So if you ever want to refer back to the PowerPoint or the video, you can always go back and watch it. So the other two presentations we did online previously throughout the election, this will be the same presentation as those webcasts. However, today you'll have the ability to ask questions live. There's a Q&A section, and we have capable reps in the other room that can answer your questions. So with that being said, we will get started because we have a lot to cover. So we know that you have a lot of questions, and throughout this process, we have seen and heard a lot of questions from members throughout the registration process, through multiple emails we've gotten. So we've broken up today's webcast into 4 different sections. So the first is we have just general questions about R+, what it is, what the pros and cons are, will people meet the eligibility requirements, how to decide if R+ is right for you. People thought they were already in R+, so why aren't they in it now? Then we have contribution rates. How do you find your contribution rate and R+ status? You're already contributing at 11%. Does it mean that you're already enrolled in R+? The quick answer to that is no. You're contributing at 9 plus 2, which equals 11. Am I all set? Another quick answer, no, you're not. We'll cover that in detail. Then we'll cover the cost, how you can estimate the potential cost it would be to be in Retirement Plus, and then all the different payment options that you would have if you do decide to elect in to participate. So when we look at the election eligibility, this is all due to recent legislation it passed last August, which is Chapter 134 of the Acts of 2022 that allow eligible members a final one-time opportunity to elect to participate in Retirement Plus. So you are an eligible member if you transferred into the MTRS from one of the other 103 mass public retirement systems between July 1st, 2001 and June 30th, 2022. And another thing with that is that you had to establish membership with the MTRS on or after July 1st, 2001, so within that same window of time. 2, you were not part of the original election window in 2001. So those are people that were members prior to July 1st, 2001. Those people are not included just because they're 2 different elections. They're both, they're apples and oranges when compared to the election processes. And number 3, people in this category did not submit a Retirement Plus election by December 31st, 2022. So again, real quick, if we received a transfer between 7/1/01 and June 30th of 22, you became a member within that period, and we did not receive a Retirement Plus election, you are part of the special election window. So a lot of people ask, what do I need to do? And ultimately, you need to vote. You have to make a vote. Because this is the only time you will be able to make this election. So if you received a ballot, it means you are not in Retirement Plus, and you must submit a response by Friday, June 30th, 2023. And you can see the little asterisk there. And that's even if you are already contributing at 11%, or if you think you're in Retirement Plus, you are not in it. So you have to make a response or submit a response. Retiring members will be prioritized. You shouldn't delay filing your retirement application. At this point in the game, if you plan on retiring June 30th, you should have already submitted your retirement application. If not, um, you may be waiting on your R plus election or trying to make a decision on whether or not R plus is right for you in order to retire. So hopefully you'll find this information helpful today in making that decision. So a lot of people don't understand the plan or the whole pension system in Massachusetts, so we'll go over it quickly. So we have a defined benefit uh, retirement plan versus a defined contribution plan. And then that means that you'll receive a guaranteed benefit for the rest of your life, regardless of what you've contributed to the system. Defined contribution is more like a 401k. You ride the market, whatever money you have in your account at that point, that's what you get at the end or once you decide to retire. But the defined benefit you'll receive guaranteed for the rest of your life. So the retirement benefit is based off of three factors. It's your age, your service, your years of service, and a salary average. So for example, to make things simple, you have a member with a $100,000 salary average, and they work enough to receive the maximum benefit of 80%. You can't go higher than 80%. That's the highest you can go. That will provide you with an annual pension of $80,000, and you get that for the rest of your life. So that amount is guaranteed regardless of the pension fund's performance. And like I said before, it's guaranteed and payable for the rest of your life. So what is R plus? Why is R plus important? So R plus is an enhanced retirement benefit, and it gets you to the 80% faster than a regular retirement would. So once you hit 30 years of service as a tier 1 member, you'll get an additional 12% on top of what you would normally get with a regular retirement. And everyone's situation is different. And if you haven't had a chance to look at the percentage charts, you can go to our website and look at all the different scenarios to see where you would end up on the chart. So one important thing is that a member must be eligible and participating in Retirement Plus in order to receive this enhanced benefit. One of the most important eligibility factors is that you have to have at least 30 years of service, and 20 of those have to be with the MTRS or with the Boston Retirement System as a teacher. The contribution rate for Retirement Plus is a flat 11% of your salary. So I mentioned the retirement percentage chart here, and you can see that there are a bunch of different scenarios based on where you would end up in the chart. So if you look at age 54 with 30 years of service, you can see that with a regular retirement, you would get 42% of your salary average. And with Retirement Plus, you get that additional 12% at 30 years, and that would bring you to 54%. So if you're using the $100,000 salary average, it's $54,000 a year for a pension versus $42,000 a year for a pension. So you can see the significant difference with the two different benefit plans. A lot of people also wonder, how is the retirement funded? So there are three different sources of someone's pension, and we'll go over those quickly. So number one, you have your employee contributions. Each month, a certain percentage is withheld from your wages, and it is sent to the retirement system on your behalf. So part of your pension is made up of money that you have put into the system. Number two, you have the state or the employer contributions, and that is when the Commonwealth contributes annually to help finance these public retirement benefits. So it's coming from the state pension plan. Then we have number three, we have investment earnings. So PRIT, the Pension Reserves Investment Trust, which holds all of the assets of the system, is managed by PRIM, which is the Pension Reserves Investment Management Board. And Prim does a great job investing all of these funds. If you haven't heard, Massachusetts is we have one of the strongest pension plans in the country, so we should be proud of that. Prim is doing a great job. So when it comes to that pension, these are the three main sources of the funding. When you take a look at all the different rates we have in Massachusetts, you can already see here by looking at this chart that it can be complicated looking here, and it is complicated, and that's why we're here today to explain it. So if you focus in on the middle column, you can see not participating in Retirement Plus. So we'll start all the way down at the bottom and then we'll work our way up. So if someone was a member prior to January 1st of 75, that person would be required to contribute 5% of their gross earnings to the system. Um, After January 1st of 75, if we move up to the next line, people that started between 1/1 of 75 and December 31st of 78, that person would be required to contribute 7% on all gross earnings to the system. So one important thing to note is that your contribution rate doesn't increase as the years go by, but depending on when you start in the system, you are grandfathered at that contribution rate. So if you start out at 7, you would never go up to the next rate, which is 7% on all gross earnings, with 2% taken on any additional earnings over $30,000 a year. And this is where things can get complicated, and a lot of people refer to that as the additional 2% or the plus 2, and we'll get into that in more detail in a little bit. But for people that started within that time period, they would be 7 plus 2 members. So if we move on up to January 1st of 84, if you start between that date and June 30th of 96, you would be an 8 plus 2 member. So it's 8% on all gross earnings and then an additional 2% on earnings over $30,000 a year. Then we move up to July 1st of 96 through June 30th of 2001. These people would contribute at 9 plus 2 or 9% on all gross earnings and an additional 2% on earnings over $30,000 a year. So this is where things can kind of get complicated because as you heard me say, 9 plus 2 or 9 and 2, a lot of people hear that and they think 11%. But as you know now that these rates are not the same because Retirement Plus is a flat 11%. So then on July 1st of 2001, this is where things differ between the MTRS and other retirement systems. Just because all the rates list that I mentioned just now are all effective in all other retirement boards. But in 2001, things changed. So if we had a member that started with the MTRS and didn't start anywhere else on or after July 1st of 2001, that person would be mandated to contribute at 11% for Retirement Plus. So that window of time is July 1st, 2001 through April 1st of 2012, because we had another pension reform in 2012, and we'll get into that in a little bit. However, for people that started between that same window of time, 7101 and April 1st of 12, if anyone started in any other retirement system other than the MTRS or the Boston Retirement Board as a teacher, they would be at the lower 9% with 2% on earnings over $30,000 a year. Then in 2012, we had another pension reform, and anyone who started on or after April 2nd, 2012 would be classified as a Tier 2 member. And in any other retirement system, their rate would be that 9% on all gross earnings with an additional 2% on earnings over 30,000, that 9 plus 2 rate. However, after 30 years of service, the rate would drop by 3%. So then you would be a 6 plus 2 member. Then for people that establish membership with the MTRS or Boston after that date, they would be mandated to contribute at 11%, and then after 30 years, it would drop down to 8%. So I know that that was a lot of information to digest. It can be complicated, but you can definitely refer to our website and rewind back on this video to get the explanations on these rates. So the difference between the 11 and the 9 plus 2, where a lot of people get confused with these rates, and obviously because 9 plus 2 equals 11 everywhere else except the Mass retirement system. So the rate for R plus is a flat 11% on all earnings, and then that other lower rate is 9% on all gross earnings, with that additional 2% taken on earnings over 30,000. So the 9 plus 2 or the 9 and 2, people hear the word plus and they think it is retirement plus. And I am guilty of that too. Even being an employee of the MTRS, when I first started here, I saw 9 plus 2 and I thought, great, I have retirement plus. But then quickly learned that was not the case. So 9 plus 2 does not equal 11% for R plus. That monetary difference per year is $600 per year. So even if you have been contributing at the 11% the entire time, you are still not in Retirement Plus, which is why we have the special election going on right now. So it's important to know that even though you have contributed at that rate, you are not currently in Retirement Plus. So we have an example here. We have Joe Teacher. Joe Teacher recently transferred into the MTRS from another mass contributory system, and he has an annual salary of $58,000 a year and is paid over 26 pays. So if we look over on the left, you can see the R plus flat 11% contribution rate would be $245.38. And that's based off of his biweekly pay of the $2230.77. And to get that number, you just divide that 58,000 by 26 pays. But now when we look at the 9 plus 2 contribution rate, that lower rate, if Joe were to decide to opt out of Retirement Plus, you can see that a flat 9% on the 2230.77 is $200.77. And then the additional 2% contributions, which we'll calculate on the next slide, is $21.54. So when you add up that regular amount, the 277 plus the 2154, you get 222.31, and that is the total 9 plus 2 amount. And you can see that, excuse me, that the two amounts don't equal each other. And per pay period, that difference is 2307. And that math will work out for anyone who makes over $30,000 and is contributing at 9 plus 2. The annual difference will always be $600 a year. So when we look at the 2%, it can be challenging to understand how to calculate that 2%. So we're trying to break it out and show you exactly how it's done. So if you look at this chart here and you look at the blue column to the right, you see that 1153.85 amount. If you had someone that made $30,000 per year, that was their salary, you take that and divide it by 26, that is what their biweekly pay would be. So if they made more than that, their biweekly amount would increase. So anything above that 1153.85 is subject to the additional 2% because it would be over $30,000 a year. So in Joe's case, you can see that there's an additional 1,076.92 that's above that 1153.85, and that is what is subject to the additional 2%. So you take 2% on that amount, and I'm just going to run back to the last slide. It is that 2154 amount. So that is how you calculate that additional 2% deduction that is sent to the system. Does anyone have any questions? I realize that that's a lot of information we just went over and it can be complicated, but we are here to take questions if you have any.
Hi, Dave. We don't have any questions in the chat at this time.
Okay, great. Thanks, Scott. So now we'll cover how to check your R Plus status in My TRS. So if you log into My TRS, Member Self-Service, we call it MSS, and you look at the left side of the screen, you'll see a tab that says Retirement Account. And when you click on that tab, there are two options there, and you'll want to click on MTRS Membership and Account Summary. Once you click on that membership and account summary, it'll generate a PDF, and if you look at your Retirement Plus status, it'll tell you whether or not you are participating. So in this case, for Paul Pencil, he's not participating, and you can see that the contribution rate is 9 plus 2% on additional earnings over 30,000. So it's that lower 9 plus 2 rate. So that was checking your R plus status in the system. Now we'll go over checking your pay stub just to see what you have withheld from your pay, and we'll go over examples of what an 11% deduction looks like. So we have three different screenshots here. The first one here, you can see 141486 is highlighted. That's the gross earnings. And you can see there is a code in the middle that says MSTR11 and 155.63. So that is 11% of those gross earnings for that employee. So if you took that 155.63, divided it by the gross earnings, you would get the 11% contribution. If you look over to the right, that 2276.81, there's another code. It says SCH 11%, and the amount is 250.45. That's 11% of those gross earnings. Then down below, you can see it's 3,335 cents, and then the code is 11% SC RET, and then the amount is 367.69. So you can see here there are three different examples of pay stubs or paychecks where we can see the 11% contribution, but the code is different for each example. And this will vary depending on your school district. So it's important to look out for a code that might signify retirement or RET or 11, just so you can see what your contributions are. Now we'll go over a 9 plus 2 example so you can identify what your contributions would be or determine if you are contributing at the lower 9 plus 2 rate. So in the first screenshot in the upper left of the screenshots, you'll see the earnings are 3,996.83. Then we have 359.71 and the code is PMTRB. And then down below, you see 5686 and it's QMTRB2. So those are the additional 2% deductions for that person. Then in the next example, we have the 2376.23, and then we have STCH 9% at 213.86, and then we see S add 2%, 24.45 for that contribution, for that additional 2% contribution. Then down below, this is where some people get confused when checking their rate. Sometimes the regular and 2% are combined into one contribution. And you can see here that if you take the 624.94 divided by 5908.53, that comes out to 10.58%. And now that we've gone through all those rates on the previous slide, you can see that that is not a valid rate in the system. So when you break down the 9 and 2 contribution, it's 531.77 for the 9%, and then a 93.17 for the additional 2%, and then added together get that 624.94. So like I said before, it can be confusing looking at this, especially when you see add 2%. You might see, a second deduction, and you might think that that's Retirement Plus because there's extra there. There's more than one contribution taken. However, that is not the case, and that's why we're here today to let you know about that and dispel any rumors that an additional contribution is Retirement Plus. And a quick shout out to Debbie and Diane for providing these screenshots because they were very helpful. Does anyone have any questions about finding your R plus status or trying to determine or trying to figure out what rate you have withheld at the moment?
Hi, Dave. We don't have any questions specifically about finding your rate, but there are a couple of questions we'd like to address.
Okay.
First one is, will we be receiving a copy of the slides that are being presented? And I can answer that one. Yes, we are recording this session, and the slides will be posted along with the recording to the R Plus Resource Center, and we'll also send email directly to everyone who registered for this webcast. You'll receive a link to the recorded video and the slides once it's complete. The next question is, if I have the full 11% taken out, but I'm not an R plus, who reimburses me, the district or MTRS?
Good question. It'll be, it could be either one. However, the calculation is done by the MTRS. And if you're still at your district and the amount is small enough to do through payroll, we would request a payroll adjustment on one of your future pays. And if we're not able to do that, or if your district isn't able to do it, we would refund you directly from here.
One more question. There are a number of questions around the same theme, so I'll just combine them. If a member opts in and they owe money, is it payable in a lump sum or are there payment options?
Okay. There are payment options, and we will cover that in some future slides in the presentation. We'll go into detail on that. But yes, you can pay in a lump sum.
Great, thanks. That's all for now.
Okay, thanks. Okay, so how should I decide whether to participate? So you'll have to look at your career and where you think you'll be at the end of it, and try to figure out how long you're going to end up working, and if you would end up meeting those the service requirements for R plus. So remember, you have to have at least 30 years of total creditable service, and 20 has to be as a member of the MTRS or as a teacher with Boston. And then the other 10 can be from your local retirement system or through a service purchase. So will you work long enough to meet the requirements? So if no, you find out you won't be eligible for the R plus enhanced benefits. You may want to elect to opt out of R plus. If yes, because you've determined that R plus is better than a regular retirement for you, you can go to the retirement percentage chart, take a look at it, just like we saw earlier, and then compare, what the cost would be compared to the benefits that you would receive for R plus. So in that case that we looked at earlier, I think it was 54,000 versus 42,000. So you can see a $12,000 difference with that $100,000 salary average, and that's payable for the rest of your life. So in a lot of cases, R plus is going to make sense if you meet that 30-year requirement. But if not, you have the ability to opt out. So the $1 million question is, how much will it cost? And that's, again, that's different for everyone. Everyone's situation is different. But if you go to our website, we have an R plus decision tree. You can see the examples on this slide where if you're at a flat 11%, you're at the 9+2, that lower rate, or an even lower rate, the 8+2. Each of those tabs will tell you how much you would owe for R plus. So we'll go tab by tab. So if you're at a flat 11%, and you've never been at a lower rate, then you won't owe any additional money. You'll just continue to pay at the 11%, and when you meet the requirements for R plus, or if you meet the requirements for R plus, you'll be all set. If you're at the lower rate, the 9+2, you'll have to pay 11% on all of your future wages, and a retroactive cost could be $600 per year of your MTRS service. So now you know how that $600 was calculated, because we just went over that example earlier. So if you think that you could have 5 years where you contributed at the lower rate, then your cost would be about $3,000. If you have 10 years of service where you contributed at the lower rate, it could be $6,000. If you have 15 years of prior service that you'd have to pay the cost back, it would be $9,000. And these are for illustrative purposes only. Everyone's situation is different. We won't be able to calculate the final amounts until after the election. Some people might have rate changes that we have to do, and we won't be able to do those calculations until we see the changes reported by your school district. Then we look at the 8+2 members. So same as this group of people, you'll have to contribute 11% on all of your future wages. But the 8+2 is not as simple as the 9+2 difference, where it's $600 a year. However, if you look at this chart, you can see that if the average salary that the person made is $40,000, then they would owe $1,000 a year. But then you can see that every $10,000 increase in salary, it goes up $100 in that cost. So you can see there at $50,000, it would be $1,100. And then it keeps on going up by 100 every 10,000. So you can see down at the bottom, Sarah Teacher, she had 10 years of prior service, and her average salary was $70,000. You can see $70,000 on the chart would be $1,300 a year, so she would owe roughly $13,000. And I realize that this is, $13,000 is a significant chunk of money to pay. And if I had to do it right now, I couldn't elect into Retirement Plus because it would be a lot of money. And some people are going to have to make some tough decisions on whether or not this makes sense for them and if they can afford to be in Retirement Plus. However, when you look at the difference in the benefit, that $12,000 per year that someone would be getting, you could see that $13,000 is actually a steal of a deal when it comes to participating in Retirement Plus. So we have this decision tree on our website. Definitely check it out to help calculate your cost. Any questions on that?
Not specifically on that, but somebody wrote, and they wrote this themselves. They said, this is a silly question, and I'll just say there's no such thing as a silly question. How do you know what tier you are?
That is a good question.
It's a good
It's not
question.
silly. So if you started prior to April 2nd of 2012, you established membership in a public retirement system, then you are considered a tier 1 member. And if you start on or if you started on or after April 2nd of 2012, then you're considered a tier 2 member. And that's due to a pension reform we had back in 2011 that took effect in 2012. And there are different there's a different calculation to the retirement formula. So those percentages in those charts will vary based on tier 1 versus tier 2 members. So once you determine when you became eligible in the system, then you can figure out which tier you belong in. But if you're unsure, you can just contact us and we can let you know.
Great, thanks. No other questions at this time.
Okay. So previous rate changes and refunds from the MTRS, and we've had some people contact us about this, and in the past we may have requested a rate change and issued a refund because you hadn't responded to your original opportunity to participate in Retirement Plus, which defaulted you out of the enhanced benefit. So through that 20-year or 21-year window that I mentioned earlier, if we received a transfer, we mailed 3 election opportunities, and you didn't respond within 180 days, that defaulted you out of the program or out of the enhanced benefit. So during that time period, when we try to resolve cases, we would request rate changes to get you to what we believed was the correct rate and to refund you to make your account whole. So all those prior decisions were made under laws and regulations that were in effect at the time the decision was made and prior to this new law change. So I realize that there are some people that are upset that their rates were changed and they got refunds. However, we were just operating the way that we had to. So if you're in this situation, you'll owe back the contributions that were refunded in order to make your account whole. And if that's the case, that should give you an idea of when the rate was changed and how much you would owe. So a lot of people ask, how many years will I owe back for my retroactive costs? And this is a tough one because it is definitely different for everyone because everyone starts at a different time, and there could be periods of time where people were at 11% or people are always at the lower rate. So as I said before, if we refunded your previous contributions, you'll owe back to when you first became a member of the MTRS. If the MTRS didn't refund your previous R Plus contributions, then you may only owe back to when we requested for the rate to be changed. So for example, we requested your rate to be changed to that lower 9+2 rate in February of 2016. You're still contributing at the lower rate. It's estimated you would owe about $4,200 through February of 23. So it's at $600 a year times 7 years. In 2017, we actually put a hold on issuing refunds because that's when we tried to get this law changed to be able to give people another opportunity and be in the situation that you are in now. Because we didn't want to refund people if we then found out that we would have to bill people in this situation. So that changed as of, I think, July 2017. So due to the number of members that we have in this election, we have about 8,000. We wish we could calculate costs for everybody, but we can't just because of the volume of people that we have in this election. So that's why we're doing our best to try to, provide you with this information and really try to figure out on your own how much you would owe to the system. So we have a couple scenarios that we'll go through. The first one, we have Paul Murray, my good friend, established public service as a librarian at the age of 23 on July 1st of 2010 and contributed to his local retirement system. So because he started in 2010, Paul's rate is 9+2, that lower rate. On September 1st, 2015, at the age of 28, he became a school librarian and a member of the MTRS, contributing at 11%. So notice that he became a member here and started contributing at 11% because he started with us after 7/1 of 2001. The MTRS received his transfer on 7/1/2017, and he did not respond to his election notices. So as I mentioned earlier, he would have gotten 3 election notices to choose to participate in R Plus at 11 or elect not to participate and be at the lower 9+2 rate. In January of 2018, the MTRS requested his school district switch his rate to the lower 9+2. Paul is now part of the special election and must make an election prior to 6/30/2023 because he's not participating in R Plus. Does R Plus make sense for Paul? Yes, R Plus makes sense for Paul because he can reach the service requirements. If he does not reach the service requirements, that 30-year service requirement, he'll receive a refund of the excess contributions between that 11% and the lower 9+2 rate. Paul has 5 years with his other retirement system and will have 30 years of total service at the age of 53. So Paul meets and exceeds the 20-year MTRS service requirement at that point. So at the age of 58, Paul will reach the maximum benefit of 80% versus receiving a regular retirement at 63%. So if we look at the chart here with those between a regular and retirement plus benefit, you can see at 53, once he's eligible, with R plus, he would get 51,000 a year with the $100,000 salary average versus $39,000 a year. But then you can see as he continues to work and gets older, he would hit that 80% once he hits 58. So in that case, it makes sense for Paul to participate in R plus. Scenario 2, Mary Educator. She established public service at the age of 23 as a paraprofessional on September 1st of 93 and contributed to her local retirement system. Because she started in 93, her rate is 8 plus 2, which is that 8% on all gross earnings and then that additional 2% on anything over $30,000 a year. On September 1st of 2013, at the age of 43, she became a teacher and a member of the MTRS, contributing at 11%. The MTRS received her transfer on 7/1/2016, and she did not respond to her election notices, so she's part of the special election now. In January of 2017, the MTRS requests that our school district switch her rate to the lower 8 plus 2. She's now part of the election and has to make a decision prior to 6/30/2023. Does R plus make sense for Mary? No, R plus doesn't make sense for Mary because Mary would need to work until the age of 63 to fulfill the 20-year MTRS service requirement. And at the age of 63, Mary would already have 40 years of service, 20 with her local system and 20 with the MTRS. Excuse me, and she would have already achieved that maximum benefit of 80%. So she would already be at the 80% without R plus. So it doesn't make sense for Mary to participate. So right now the election is underway, as you know. Packets were mailed out twice. The first time on January 11th of this year, and then again more recently on March 31st of 23. By our election processing vendor, Yes Elections. With that paper ballot, there were credentials where members could vote online, and we've seen a lot of members have voted online. So there's a unique code that you would have and a PIN that's printed on the ballot or in an email. And if you do decide to do a paper ballot or mail it in, you would have to mail it to Yes Elections. You wouldn't mail it to your school district. You wouldn't mail it to the MTRS. You would have to mail it back to Yes Elections. And there's a pre-addressed prepaid envelope that were included in the ballots that you would send to them. We tried to make things a little bit easier for members, and on April 13th, and then more recently on May 8th, you may have seen this, our vendor was able to email voting credentials, and that came directly from Yes Elections. So if you can, search your emails for Yes Elections, all one word, and you should see something in your inbox. If you need a replacement email or replacement credentials, you should email us at retirementplus@trb.state.ma.us, and we will ask for the vendor to email you those credentials. So as I've said earlier, this election period ends on Friday, June 30th. It is very important that if you are sending it in by mail, it needs to be postmarked by that date. And if you're doing it online, it must be submitted by midnight on June 30th. So, we're already almost in mid-May and time is running out on this election. So it's important that you review our website, look at all the materials we have, rewatch this webcast, and make an informed decision by that date. Because after June 30th, there will not be another opportunity to elect into Retirement Plus. And I've said this in other webcasts, in the law, there's no provision for any emergencies or, extensions on this deadline. So if you get sick, you end up being in the hospital, you can't make an election. you can't make, we can't allow you to participate in R plus. So it's important that you get it in before that deadline. Post-election steps from the MTRS. So if you've elected to participate and you've always paid at 11%, we will send you a confirmation email, and we plan on doing that probably in another couple weeks for those that have elected. If you've elected to participate and have not paid at 11% during part or all of your MTRS service, we'll send you an invoice with installment options for amounts that are over $1,000, and we'll go over that in a little bit more detail in the next few slides. If you elect to opt out of R Plus and have paid 11% during any of your MTRS service, you'll receive a refund of the excess contributions between the 11 and the lower rate. The MTRS will communicate rate changes to school districts, so please do not ask your HR or payroll department to make any changes to your rate. We will send the request to them to change it. And we do plan on sending that within the next week and a half or so for people that have elected. So invoices and payment methods, how can I pay? So someone asked this question earlier. So the MTRS will invoice you once we confirm your rate has been changed. And I think we get into that a little bit later on, but it could be a while before we see that change. There's no interest for the first 90 days on your invoice. So the clock doesn't start ticking on that interest until 90 days after we mail that out. So if we mail out an invoice a year from today, that clock will not start ticking until a year from today. Unfortunately, balances cannot be paid via payroll deductions. You can't have it withheld from your check. Balances must be paid in full prior to retirement. You can't pay after. Everything has to be paid and your account has to be made whole before your retirement. And as for the different payment methods, you can pay in full with a personal check. There is a 5-year installment plan for amounts over $1,000. Unfortunately, we don't accept credit cards, so you can't pay with a debit or a credit or a debit card. And we do accept rollovers from qualified retirement plans. So if you do contribute to another pre-tax annuity, like a 403B account, depending on the financial institution, you should be allowed to roll money over from that account to pay for this invoice with the MTRS. So when we look at our resources we have for members, in case you haven't seen it, if you go to our webpage, right on the homepage, you'll see a Retirement Plus Resource Center with our new R Plus logo. And our communications department has done a great job of compiling a ton of information on Retirement Plus and has added it all in one place. This and the previous webcasts are on there, that decision tree. There is a lot of information there. So definitely go check it out if you haven't seen it yet. So when you go to that resource center, just as I said, we have the special election. There's an overview video on the special election. We have that decision tree. There's detailed contribution rate information there. If you have to see it, that whole grid there with all the different percentages are on the website. You can request a replacement ballot. We'll email it to you. You just have to email retirementplus@trb.state.ma.us. And if you need that replacement ballot, we can email it to you with those credentials. So important items to take away from today. I can't reiterate it enough. If you're part of the special election, you've received a ballot, you're not currently in Retirement Plus. And if you want to be in Retirement Plus, you must elect in. It's very important to do that prior to that deadline of June 30th, 2023. So even if you're already contributing at a flat rate of 11% and believe you are in R Plus, please fill out and submit your election. And I know I've said it a bunch of times, but we've gotten emails even recently from the Retirement Plus inbox of members thinking that they're all set because they're contributing at the rate for Retirement Plus, but they are not in it. It's important that if you want to be in, you have to respond to the election. Um, if you do not respond to the election, you will not be in Retirement Plus. No response will count as a no election, and you will not get another chance to um, participate in Retirement Plus. So again, this election window closes on Friday, June 30th, 2023. They can be received online by midnight or postmarked by June 30th, 2023. So if you are at our office door on Monday, what would it be? July 3rd. Um, Unfortunately, you would be out. We couldn't accept your form. It would be too late and you would be out of Retirement Plus. So please go to our resource center, which is mtrs.state.ma.us/r+, or email us at retirementplus@trb.state.ma.us if you have any questions. So I realize, it's late in the afternoon. You've had a long day, so I really appreciate those that have joined today to learn about Retirement Plus. And if you have any questions, we'll take some now. And if not, have a great day. But if you ever have a question, you can always email us, like I said, at retirementplus@trb.state.ma.us. Do you have any questions, Scott?
We do have a few good ones here.
Okay.
Let's start with the 5-year loan plans. Are those paid monthly, yearly, or can we choose an option?
You would have to pay them yearly, and it would be the same due date every year, just on the same date, but in the following year.
Great. To clarify, if I know that I will not meet the 30 years of creditable service, I am not eligible for R+. If so, do I need to submit a ballot?
Yes, well, if you know that you're not going to meet the 30 years, yes, you need to submit a ballot. Regardless of if you're going to be eligible or not, you should make a decision on whether or not you want to participate, just because that's going to help us determine what your correct rate should be. And there's no gray area. We don't have to wonder if you ever got our materials, or things just got busy and you couldn't make an election. It'll help us know that you actually did the right thing and you paid attention to our communications and you got things to us on time. So we would appreciate an election.
Great, thanks, Dave. The next one, if I opt in, but then do not stay for 30 years, will I receive a refund of the cost that I have to pay to opt in now?
Yes. So if you choose to participate and you reach the time of retirement and you don't meet the 30-year requirement, we will refund the difference between the 11% and that lower contribution rate that you would be at. So if you think you're borderline, you don't know if you're going to meet the 30 years, you might. I can't tell you what to do, just because the decision is completely up to you. If it were me and I were in that situation, I would probably elect in to be safe, knowing that I would get the refund at the time of retirement. However, it is completely up to you to make that decision.
If I opt in, but the amount is more than I anticipate and cannot pay, can I then opt out?
So that is a good question, and I'm glad that you brought that up because I think someone asked that at one of our last seminars. And unfortunately, you can't opt out. Once you make an election, you can't change it. after the election period is over. So if you elect in and you find that you can't pay it, um, you'd have to pay that amount prior to retiring. So um, depending on the amount of time you have before you retire, um, you might have some time to save up if it's a large amount. One thing that I forgot to mention earlier is that invoices are probably not going to go out for a while, depending on your situation. So if you're at a lower rate and we have to request a rate change, we may not start invoicing people until the end of this calendar year, and at this point now that we're almost in June, it'll probably bleed into 2024. So if you don't have one of those supplemental plans like a 403B, now would be the time to go to your payroll officer or your HR department and set one up so you can contribute money on a pre-tax basis from your paycheck, have that taken out, and then when we send out the invoice, you can use some or all of that money to pay um, for the amount that's owed. So if you think you might be in a situation where you might not be able to afford it, it doesn't hurt to be prepared now to start that process so you can be ready for when the invoice goes out.
Great. The next question, where do you find out how many years of creditable service you have?
So that's a good question. If you log into my TRS, there is a report that you can run that will estimate the number of years of service that you have. In 2010, we went through a system upgrade where the service gets automatically calculated in your account. So service prior to that might not show up on the report. So you could go online, run the report, but also you could try to calculate it on your own. Try to determine how many years you have on your own, depending on when you started in the system, um, and just try to get a rough estimate of how many years you would have.
What is the interest rate for payments over 5 years that are over $10,000?
Great question. So, not 10,000, but over $1,000. The interest rate is the same regardless of the amount of the invoice. But that rate will fluctuate every year depending on what the actuarial rate of return is on the pension system. So when it comes to these invoices, we charge half of what that actuarial rate is at the time. So right now, the actuarial rate is 7%. So we charge 3.5% on these types of purchases. However, in 2024, if it were to increase to 8%, then half of that would be 4%. If it dropped down to 6%, then we would charge 3%. So it would all depend on what that rate is next year. However, currently it's 3.5%.
Okay, great. I think we're coming up on our last question. Can you please confirm what I believe you said earlier, that there is no interest until 90 days after the invoice date?
That is correct. So, if you started back in 2005 and you owe contributions going back to 2005, we don't charge interest going back to that date. We are only going to start charging interest prospectively 90 days after we send the invoice out. So there is a little break on the interest that we charge on these.
Great, thanks, Dave. Looks like we've answered all the questions, either the ones that have been published and the ones that are in the private Q&A. It looks like we are good with questions for now, so thank you.
Okay, thank you. So thanks everyone again for attending today. I really appreciate the time that you've taken to view this webcast today. And, I know that you have an important decision to make. I hope you make it before Friday, June 30th of this year. And if you have any questions, feel free to email us. We are here to answer your questions. So I hope you all have a great day. Hopefully the Celtics can turn it around. Go Celtics. And good luck on the rest of your school year.